This Pitch Breakfast video is brought to you by Spangler & Agins, attorneys for Charlotte's startup community.
First off, thank you so much for coming out here. I know it's a busy morning, and so it's great to see so many people here. My name is Marvin Abrinica. I'm with Wunderfund, and Wunderfund is an equity crowdfunding portal. We operate here in the Midwest and the South, and every year there are 2 million businesses that start up here in the United States. 80% of them are not accessing the banks yet for lending, and less than 5,000 of them will ever get funded by venture capital. And this is the growing gap in early stage capital. In fact, early stage capital, even from venture, is declining as of right now for the 5th year straight. And this is where Wunderfund comes in, and Wunderfund takes traditionally, which are private deals that are only accessible to accredited investors, and we make them public with an online public offering using public regs that are given to us by the SEC. We make those public so that everyday investors, as well as the angels and the accredited investors, can now invest in these companies as well. And unlike other equity crowdfunding portals that are out there on the coasts, primarily in New England as well as the West Coast, they're overlooking a huge market of small businesses across America. We're talking from breweries to distilleries, small Midwest tech companies who are overlooked. We're talking about bakeries as well as restaurants, and that's the market that we're trying to break open even more so. And we have a pretty good traction so far. I'm a brand builder. I spent 18 years at Procter & Gamble building brands in our healthcare division, running our P&Ls, and we take a brand marketing approach to funding these deals. Since we launched in early 2018, late 2017, we've had 17 deals come through our pipeline. We've funded these just north of $2 million. We raised $175,000 in capital ourselves, as well as now we're looking to break it out even further. Now, as we look at the future here, there's really two asks. Number one is we're trying to work with banks to uncover a basket of loans that they want to close and service by bringing equity to the table. That's one thing that we'll do. The second is, as we look at venture capital and early stage venture capital, we're looking to partner up with other venture capital to brand those venture capital firms to get more investors to the table, and then also open up their books to close more deals. That's what we specialize in. My name's Marvin Abrinica. I'm from Wunderfund, and we're here to fuel the moonshots and fund the dreamers. Thank you so much.
Good. All the speakers today were really articulate and can get up in front of a crowd and talk, so that's great. So your focus, so there's a lot of, not a ton, but there are a bunch of companies out there doing crowdfunding. Yeah. And so it sounds like what your is your differentiator here, your understanding the rules and regulations and building your platform so it can work in Indiana and Iowa and Tennessee, where the other companies that are doing this are just building it for firms that are in the Valley in New York?
Yeah, it's really about like deal sizes. They're focused, it's a very, that's the red ocean is on the coast. They're battling it out on the coast to get those tech deals, those deals that are bigger in that side. In flyover country, as we know, there are thousands of these companies that need capital, small business capital. And so that's why we're really focused in this retail sector, because we understand that in terms of raising capital, it's about building a brand, and that's what we're really good at. And so we know that we can help those companies, and we've proven it.
So it's deal size that differentiates you. You're doing smaller deals?
It's not just the small deals, because we see that as a volume play. So with banks who are unlocking SBA loans, we want to unlock those. That's volume. Okay. When it comes to the Midwest, it's overlooked tech companies there's only 22% of venture capital that's even available for companies in the Midwest. And that is the biggest problem we see, and we see that as an area for us to take over.
And you said you've done 17 deals. What's the percent that have been, how many have been on your platform? Have they all been funded? A high percentage of them funded? 2% of them funded?
We've got a 78% success rate on our platform.
Yeah, I'm not, you have a marketing background and brand, and I have an engineering background, so I'm always looking for numbers and data. And,
Yep.
and how long? So 78% rate. That's another good sign of traction, and you stick with those numbers when you have traction.
Appreciate that.
So how do you, right, another marketplace? So you gotta build the supply and you gotta build the demand.
Yep.
And you're going after retail investors and small companies. So how do you
How's that work?
build those two
Yeah.
sides of the marketplace at a cost that's gonna allow you to make money?
Yeah. So this is what we call our moonshot for the year. Okay. So we look at it as you have to automate deal flow, and we look at banks as and institutional lenders as an opportunity to do that. They're sitting on loans that they want to close, but they can't close them because they're at risk. There isn't enough equity at the table. They're hairy deals, if you will. Bring those to us, and we'll take a crack at it. Okay. Then from the opening up the investor side, it's really about digital marketing. That's what my bread and butter was. While I was at P&G, after I was at P&G, I started an agency. That's how we got into this whole space is digital marketing. So we know how to do ads, we know where to place them, and geofence them, and activate investors. And so that's that side of it. So when the other nut that we could crack with this is automating the investor side. And here's the gold standard is what we would like. We would like a bank to have a banner ad for a deal that's in Charlotte for a brewery that you guys know here in Charlotte, that any of their customers who log in for their bank account can see that deal. And if we can get that type of gold standard, what it does, it opens up the number of eyeballs to any given deal to the millions. And that is the biggest problem in equity crowdfunding right now. Because when you look at equity crowdfunding, if you look at the stats, there are 145,000 individual investors who've invested in a deal last year. Last time I checked, there's 310 million Americans. That needs to crack open. We think that is only going to happen by changing the channel partners here from a marketing perspective, and that's where we're looking for institutions to do that.
And so if I'm Charlotte's troubled son, Wells Fargo, and I'm thinking,
You said that, I didn't.
yeah, well,
He's from Durham.
everybody wants someone to look down on. And I'm thinking, I really gotta get back some mojo in this retail banking space, and I think a good way to do it is to put investment opportunities in front of my average, checking account customer for them to invest in a restaurant that has a 5% chance of success at best, and that's probably not going to give me any blowback. Tell me why that's
Yeah. So
why you don't think
I would
that's a
say
potential issue.
I would say the flip side of that is that they've already looked at their loans, and they were going to invest in it if it had more equity. So if it's a deal that they would close already, then we'll take a crack at it. And the second thing is that from an SEC standpoint, our job as a portal is to wind up the deal and make sure that the disclosures are fully disclosed for the investors, and then also protect the investors to how much they're exposed to in these deals. And so as part of that challenge is that we need to make sure that the deals are legitimate. And as part of our job as a portal and their job as a lender is finding the legitimate deals that are community-based, that have an impact on the area, that are good for the bank and they're good for us. So if we can find that sweet spot, that's where we think we can win.
Have you talked to banks to see if John's concern is legitimate? Because it seems it just seems like a bank is going to be willing to suggest.
Yeah. So that's why we're here in Queen City FinTech. This is the second largest hub of banking. And we've talked to a lot of bankers even before this about the opportunity. And every banker wants to close more loans. That's what these community managers, these commercial lenders are trying to do. So that's one thing. And the other thing is that it creates a new revenue stream, because as part of the SEC rules is that we can offer points to promoters. It's all disclosed on any of these given deals. And if the bank promotes it, they can get a point or two on any of these fundraising deals. So that's how we look at structuring this business model. So there's an incentive for them and there's an incentive for us.
Anything else from you guys?
I rest my case.
All right. Anything
Thank
else from
you.
the audience?
In the back,
Any
yes.
questions? What's the largest one that's been funded so far?
Yeah, the largest one is a brewery in Cincinnati. They have already funded $580,000 in their business. Even last night, I was on a phone call with one of their investors and closed another $25K. So that's the largest one so far. And then we've got a number of them that range anywhere from 30,000 all the way up to 150, 160,000.
Just out of curiosity, what's your fee structure? How do you make money?
It's very simple. We take a 7 to 10% success fee rate.
No?
So I don't see the banks doing it. Have you contacted somebody like Robinhood?
No, we haven't talked to Robinhood. If you've got a contact over there, happy to talk.
I mean, you got LinkedIn. I mean, they're aggressive. They try to open a checking account and they really didn't have permission.
No,
I mean,
it's a
I'm
good.
sure a better fit for you than a traditional bank. Too many
It's great.
regulations.
No, it's a great thought.
I do like the idea of going in behind and helping them get their loans funded. I am obviously a little bit skeptical about whether many of them are going to feel comfortable advertising these types of investment opportunities. But yeah, you should definitely be talking to Live Oak Bank if you aren't already.
Yeah, they're on our target, on our list. Yes.
I do one quick one.
Yep.
Yeah. Are you funding or investing in first-time operators, second, third, fifth, 10th location?
I would say it depends. Okay, so the size of the deal is one thing, but we also do a diligence process when it comes to all these companies. We obviously like experienced founders, people who know what they're doing. And we also like products. In the crowdfunding world, it's very brand heavy, meaning that it has to be something that people can get their head around.
Yeah.
And if it's like a widget that sits in the car somewhere, it might be $1 million business. But if it's just something people can't get their head around, we'll go past those. So we turn away more companies than we say yes to.
With that, I say thank you to Mark.
Thank you, guys.